Good afternoon, Scott with T3 Live. Welcome to today's recap. So there were definitely some divergences today, right? The Dow was up about 150 points, or no, I'm sorry, about 105 points, maybe 120 points at the highs, and the NASDAQ was lagging. You had consumer staple stocks that we've been talking about in the morning call a few weeks back continuing to break out, and then you have the Russell really weak, and you have tech a little off, and banks a little lethargic, our high beta names also a little bit out of play, so it's made for a little bit of a difficult environment where it's really been somewhat just stock selection. You can see by my virtual trade floor, I'm very light. I'm not heavily short. I'm not heavily long. I'm just going to take some trades here and there when they present themselves, and we had a few of them today. So first thing, look at the chart of the SPX. If you take a look at this chart, you will see that you have the trend that's been intact since the lows. This was the last little time that it tested it. From there, there's been times to be overly long and times to be flexible. This was the red dog reversal. Here was your descending channel that we broke above. Here was your commitment to it. Here was your breakout above the prior highs. And here we are just going sideways. Not enough juice to break out above it today, but that doesn't also mean it's a blaring short. The diamonds, or the Dow, it had enough juice. You look at this chart, you look at this channel, and you'll see that the Dow is somewhat on its way to new highs, or actually probably, no, it closed at 2013 highs, so I'm sure we'll see those headlines today. You know, here was a little bit of a reversal. How yesterday it looked as if we were breaking this upper area, now today we're at highs. That's just the way this market's moving. We talked about this morning how you need either very quick feet, okay, in order to maneuver the ranges and try and create alpha and create cash flow, or you just sit back and let things work out. And unless some of the macro trends change, you don't do anything. Like a lot of the bears are pointing out the Russell today. And you want to notice it, right? Why not? Especially if you're investing in the Russell, you're just in the wrong spot right now. This was when it got engulfed right up here, broke the 8-day, came in, a little bit of a bounce, and then Russell pretty much closing the lows. So does that mean the overall market is a blaring short? It just means maybe the Russell is going to have one of those rolling corrections, while other things like the consumer staples is going to continue higher, right? Or other things, even the industrials, think they closed near the highs. But then you look at technology, and it just kind of hung out. So with that being said, the market's not always going to move together. We talked about, high beta tech. So if we come back to me, high beta tech, a lot of these companies came out with good earnings and have done nothing since. So real quickly, you look at just say Google. Google, right now, to me, it's still hanging out. It doesn't mean game over here. It just hasn't been the place to be. Here's your gap up after earnings. Gave us a nice little trade thereafter. And it's still trying to hold around. So it's still digesting what's been a really nice move. So all of a sudden, this thing goes over 1,031 and it's game back on, so to speak. It's just been a lethargic trade right now where no one's really trading it. Same way with Amazon. People are trying to short lows here, not having a good time. I just stayed away. Same way as today, if you bought the strength early on, you got a little hurt. So it's just still in this range, which just makes it a little hard because people like to buy high, sell higher, or short low and cover lower, and that hasn't happened in some of those high beta names. Netflix reversed today. Or I wouldn't say reverse, it just didn't go up. It started up, so you could say a small reversal right there. So needs time, nice little run from here. But again, this is just choppy nothing. It's so hard. But then you look at some of the mega cap. So lately, a lot of attention has been on mega cap because I guess people are looking for yield since rates are still low and these things are considered cheaper and they're liquid, and some fund managers are trying to play catch up. And you look at Microsoft. This had a big move. I'm sorry that we weren't all over it. Technically, here was your day one. Then here was your ad for day two as it cleared resistance. And then if you took some home long, there's your day three. Awesome trade for Microsoft. That's why the market continues, because this big, highly liquid name weighted in a lot of indices had a nice day. Look at Cisco. Cisco guys on the VTF were talking about it yesterday. How's it had a day one, right? Here's your day one. Wasn't as strong as Microsoft for day two, but a decent day two. Looks like it can go a little bit higher. Then you had Oracle. Sperling was talking about it on the VTF today. It didn't have a blockbuster move, but it sort of cleared this little flag and closed a little off the highs and looks decent. I guess tomorrow, if the market wanted to stay strong and go after some of these mega cap names that have very low PEs but are behemoths, then that can continue. So this is where some of, I guess, the better trades are. If you look at this chart, you could say it's starting to break this downtrend here, and I guess now as long as it stays above this breakout, that could be in the game. As far as someone was talking about VMW day one, I still think it's kind of in the penalty box, but it did have a little green bar. That just shows you how we're stretching for ideas, because to me I'm having a hard time finding A+ setups, so I'm just going to pull it back. It's been a really good 2013. It was a really nice calculated move in the October lows, so I'm not going to push it up here. So my active account doesn't have any equity trades in it. I'm going to let it be flat. So tomorrow on Twitter, I could, which I'll talk about later, have a free, have just Twitter. We'll see what happens there. We'll see if there's a trade. Facebook, you look here, still trying to, I guess, figure out what's next here, right? Nice trade yesterday from the open below, trade above the previous day's low, and then today was the opposite, opened above the previous day's high and then came below it. So yes, there's some micro trades in here, but nothing blockbuster. I guess we'll see what wants to happen here tomorrow. Once Twitter's out, we'll see how that gets treated. Some still are pointing at a little bit of a head and shoulders top, left shoulder, head, right shoulder, and that's the case. This is what it would have to break in order to see some downside. LinkedIn, let's see what that did today. Look at that, reversal. Okay, looked strong. We talked about it getting to potentially 228. What did it go to today? It went to 229.27, then reversed hard. So you're seeing a somewhat bear flag develop here, where here is your earnings move flag that can give you continuation to the downside. So after a tremendous move like you've seen in something like a LinkedIn, it's looking a little faulty here, where it could see some lower prices and keep correcting that this wide range bar stays in control. So you're seeing some short setups. So you're seeing short setups while the market's still hanging in there. So if the market were to pull in these short setups, you would think would have followed through to the downside. Look at BBY. That stock to me is over now. I actually shorted it. This thing was left for dead. Remember down here and became one of the biggest short squeezes around from 10 bucks. So here's a nice wide range bar, potent move. So maybe this will give you a trade down to this 39 area. Okay, and why not? I don't think anyone ever really goes to Best Buy, but whatever. So this is your first time. A lot of people have been trying to short this the whole way up. This is your first real red flag. Maybe it takes a little time to work it off, but that could be a swing short. Look at A&F. My goodness, that's gross. You had a big gap down, came up, tested this gap area, and then look at that. I guess that was earnings and closing the dead lows. That's a full-fledged avoid. Tesla, which has been really good to us this year. We followed this trend. We milked as much as we could out of it while it held the 21-day. And if you remember, right around here, first it got a little wishy-washy. Okay, this was your first ascending channel that broke. This is when the market made new highs, and it didn't. And then today, it's dancing around the 100-day. I had options in it, and it was a premium paid loser. It happens. Better than being stubborn in the stock. Some people are saying now this head and shoulders formation that took place here is kind of built, a little sloppy or whatever. But that measured move would be about 190 to 160, 30 points. 30 points from 160 gets you a move to probably here, which at this particular point, what we do know is we know the high of yesterday or today. See what happens here to see if it's continuation to the downside or if they're trying to fill some of this gap. So at this point, though, the trade is totally different. Totally different than we were able to do by playing breakouts like we had right there, or buying a red dog reversal right there, or playing another breakout right there, or playing another breakout right there. Probably not the case for a while. Now you're going to have a big time channel, and we'll see what happens if we get some kind of reversal strategy, and then it's not going to be the same Tesla for a while. That happens. When you trade momentum fast names, when they change, you change. You move. You switch your gears. Okay? When they're pent up and they go and you could be in them and they move fast and they pay you well on breakouts, that's unbelievable. When they change, they change. And that's it. And then you figure out what's next. As far as NDLS, another one, I have to, actually bad call again. This to me, I thought was worthy of a play, worthy of a try, right? If this base that it's been in for almost 6 months was good enough, and they had a good report, it should have traded above here, 52, considering the time. So now it might need another quarter. So what did I do? I took 47.5 calls. Well, no, I'm sorry. I took $50 calls for $1.40. Risked a little bit. If it worked, it would have been great, but it didn't work, so it'll be another paper cut. So 2 paper cuts in a row, which kind of is unfortunate. But when you take something that works, like a Google, that you could buy at 8 and sell at 80, where the call spreads we had now, gives you a little leeway to do some small calculated plays that could be big winners or not. But don't risk too much, because it's kind of like a little bit of a flip of a coin. This one, at least had the setup. So if you look at the setup and you want to be involved, take an option play into earnings, and if you lose on it, cost of doing business. And if it worked and you weren't in it, you'd be pissed. So whatever. As far as the banks, I guess Goldman still acts the best, but really hard to trade. These banks are just out of play. Today, they put in the highs in early in the day, and then it poked its head out a little bit. Bank of America still lethargic. Not doing much. Maybe they were still waiting to see what happens with JP Morgan, but overall, this group itself has not been the place to be. It's been other places. So with that said, for me, I'm just going to take it easy. I'm going to sit on what has been a really nice year. There are times, again, to be in portfolio approach, be 6, 8, 10, 12 positions. There are times to be short if the market looks like a short. Right now, the market doesn't look like a short, but there's divergences, and it's tough to be exactly where the money is. I'm typically good at finding out where the money is. Right now, I don't really, have I guess, a great indication of where I should be. I'm not going to start chasing mega cap stocks now. I'm not going to start chasing the consumer staples that we went over. I'm just going to say, you know what? I'm not sure what's going on here. I'll sit on some cash, or I'll have a lot less positions and look for one-offs, like in eBay. eBay, got to give it to Jim, give a great call, boom. eBay at the bottom end of the range. I know RD talked about it the day before, but obviously it didn't look like it was a trade then, but then it came out with some news that Icon might be using it, and more importantly than the news, it traded well. It went up and continued, and that was a good trade. FedEx also, talked about Ihorn presenting as a short. So you take the news and you take an extended chart. Then it was down $1, wound up being down 3. That wound up being a good play. So if you didn't have FedEx today, you could have played it not just because of the news, because of the price action and how it affected the chart. Also, OXBT, if that's even the spelling of it. Look at the move that this thing had. Okay, this thing had a huge move, huge. So I know Sperling started shorting it yesterday. I came in today, shorted it a little bit early, and then it squeezed me out. And then all of a sudden, started rolling over around 10:40, I tweeted saying that once we trade back below 975, which would be a red dog reversal this way, that could be a good topping tail. And it wound up turning out to be a really nice short. So the little money I made trying to be early, I made back and then some on that. And if you look at the 5-minute chart, you could see exactly how it happened. First things first, it squeezed through the prior high, because if anyone was trading it versus 975, you have no idea where it's going to go, and it pushed through and squeezed. And then right here is when the trade actually became calculated. Market was strong, it came in, started getting heavy. Here is trade number 1, and then it made a nice little bear flag, and then trade number 2 to go negative. So that was trade 1, trade 2. This one was difficult, but again, I think back in the day, I would have gotten squeezed here and said, you know what, I'm not playing this stock anymore, it got me. But I changed. I said, you know what? I just did it too early. I'm going to go back to it. Went back to it here, went back to it there, covered into this, and made my money back. And with that said, now this stock is somewhat in the penalty box. But that's a setup. These type of setups happen all across the board as a prop trader or as a professional trader or whatever you call yourself. So if you're not seeing it, all of a sudden some things show up and you go with it. Today also, GMCR, there was a little talk that there might be good data, blah, blah, blah. It went up for a little bit. It was up 60 cents. I tried that too. And then it failed, went negative, and I said, you know what, that news means nothing. The stock's doing nothing with it, so I'm out of it. And it was a small paper cut. So as long as you admit that something doesn't look right, smell right, and you try it, just get out of the way and take a paper cut and move on to something that works out, that shows you the reason why you're in it, and the market confirms it, and then you make some money. And there are other times when your thesis is fully working and you could be in, again, 6, 10, 12 stocks, whatever it is that you're comfortable with doing, and letting the market make you money, and then trading around those positions, with a tier system as a setup technically. So that said, I'm very light right now. So tomorrow is Twitter. Yes, every day I seem to get a little less excited about it, because A, when it was 17 to 20, it sounded psychologically very exciting. And then all of a sudden, 23 to 25, you know what? Seems like it still could be a good trade. Now they're talking 25 to 27 for the price, and now I'm hearing from the syndicates that it could start over 40. So with that said, it's going to make it probably for a volatile, hard trade. So, you know, it's going to be tricky, but again, I'm going to try not to have any opinions about where it opens, whether or not it means it's a bad trade, it's not going to be a good trade. Because when LinkedIn opened up at 90, people were like, oh my God, I can't touch that. But it did the art of the first day. 90, touched 92, went to 88. All the flippers, everyone got out of the deal, started coming up. It was a very tight float. Traded through 92, went to 115. Nice trade. Facebook, obviously, it didn't happen that way. Opened at 42-ish, went to 44, back to 42, back to 40, back to 42, back to 40 to 39 to 38, and it failed. Okay, so tomorrow we'll get to see what does Twitter do. Does it open up? Where does it open up? In my head, I was like, you know what, if it opens up below 30, I'll buy everything inside and I won't even use the art of the first day because I think that it will be in the 30s. Then, you know, I'm thinking maybe it opens up at 35. If it opens up at 35, then I just got to give it a little space. Got to see what happens. Let it go to 35, maybe go to 36, come back to 34, 33, hover. Let all the guys who made their free lunch flip out of it. Wish that I had a free lunch, but Red Dog never gets a free lunch. But anyway, with that said, then wait for it to come back to 35, hovers there, looks like it could take out 36, the supply is absorbed, then maybe we get a good trade above that 35, 36 to 38, 39, or maybe higher. You know, but if it opens up at 42, I'm definitely not just going to buy the open. Then you got to wait and see how much it comes in and then trade it off the low and see if it comes back and then could trade over that. We'll see. But the art of the first day sticks. It measures supply and demand. There was a great deal that everyone won, I just want to show you, which was VJet. VJet came out, I think, 2-3 weeks ago, and I posted the chart. Now, this is what I wish Twitter would look like, right? This came public, wound up closing on the highs. It opened up, went down, absorbed it, closed on the high. So as a trader, you were able to make money buying it. Plus, it was priced, I think, in the 16s or whatever. So even the underwriters and the flippers made all their money. Okay, and then you took some home long. You got your day two. You sold it. Great day and a half trade. A lot of people happy. A lot of good memories. What did it do? Came and tested this area and then built another nice little pattern. Okay, and then we talked about this. I bought it actually on here where it didn't need a whole lot of time to rebuild because there was no one trapped. Everyone made their money. The new issue, the people involved, guys who bought it the first day, who took it home the second day. You know, if you stayed even if you took it your third day, you still could have sold it on this wide range bar saying, okay, it doesn't have a third day. I stayed a little bit too long on my trailer because hopefully you only had a trailer by the third day. So anyway, here was your day one. Confirmed it. You could have bought more there, and then it already made a new high, kind of like what X1 did or Coors did. So this was a great deal. And the reason why LinkedIn was a great deal and made a historic move quickly, because it too made a lot of money for a lot of people. Everyone won, not just the underwriters and the guys who had the free stock. Facebook became a disaster and took so much longer because everyone lost. Everyone hated it. People had nothing to do with it. You know, there was so much stock everywhere that it had to be absorbed. So it took multiple quarters of pain, and probably people got suffered out of it. And then finally, after multiple quarters, it made that cup and handle pattern, and then we had the big move. So it can go any way tomorrow. It could be a great deal, and it can move fluid, and everyone can make money. Or they could open it up way too high, make it very volatile, close it well off the highs. Traders won't make money. People will be a little bit upset. The media will talk bad about it, and then we'll have to just wait for a nice pattern to develop, which it probably will, and then we approach it then. So with all that said, I'll probably tweet once or twice in the morning before 6, and then that's it. I'm dark tomorrow. There'll be no Twitter for Scott Redler tomorrow. I'm going to be on the virtual trading floor. If you want to trade Twitter with me, sign up tonight on the virtual trading floor. Go to t3live.com and just put your email in there and sign up for a free 7-day trial. Then you'll listen to me on the radio. You'll see what the community is talking about. We'll figure out if there's an opportunity, and you could follow me live there. Won't be on Twitter on Thursday, and I probably won't be in it for a portion of it on Friday. So if you want to find out what we're doing, how we're doing it, just put your best foot forward and sign up for the VTF. I'm not asking you to spend money. I'm asking you to put your email in. That's it. And then be involved. And I have a feeling once you're involved, you'll see how we handle ourselves, you'll see all the value added from the group, from the community, and then hopefully you stay. Because the more eyeballs we have, the more traders we have that know what they're doing, the better the community is as a whole, the better we uncover opportunities and trades. And I think if you're a professional trader and you know what you're doing, you will log into the VTF, you will see the value added, you'll see our positions, you'll hear us talking, and you won't leave. So tomorrow, no Twitter from me. Hopefully I'll see you on the VTF, and then I'll be back over the weekend or so. So tomorrow could be a very exciting day, or it could be a non-event. We'll figure it out with no opinions, just with strategies. Have a great night.